Welcome to a new wave of entrepreneurship. I'm Scott Stewart, founder and CEO of Venture for Canada, and your host. The focus of this podcast is to hear from changemakers and Canadian entrepreneurs to learn about how they've developed their entrepreneurial mindset and skills. In season 3, we'll be chatting with CEOs, founders, and successful business leaders about their career journeys. I'm excited to dive into these conversations about how to foster your entrepreneurial mindset and drive. We had covered a lot of different topics today. We talked about the German education system. We talked about venture capital. We talked about online marketplaces. We talked about climate technology and also book recommendations at the end. Boris Wertz is one of the top early stage tech investors in North America and the founding partner of Version 1 Ventures. His portfolio encompasses over 100 early stage consumer internet and enterprise companies. Boris is also a board partner with Andreessen Horowitz. Before becoming an investor, Boris was the chief operating officer of abooks.com, the world's largest marketplace for new, used, and rare and out-of-print books, which got sold to Amazon in 2008. In 2005, Boris was named the Pacific Ernst & Young Entrepreneur of the Year award winner. Thanks for joining us today, Boris. How are you this afternoon?
Very well. Thanks for having me.
You grew up in Germany, and one of the things that personally I found fascinating is the German education system, which is in many ways quite different from Canada. So can you describe to our listeners, first off, kind of a high level overview of the German education system? And what are some things that you think Canada can learn from the way that Germany runs its education system?
Yeah, I mean, listen, funny enough, I think the German education system has kind of assimilated a little bit to the Anglo-Saxon education system over the years. And for example, now we have bachelor degrees in university and master degrees in university, which we didn't have before. But having said that, I think the German education system has really two unique features. The first one is it's mostly free education, right? Both for obviously the schooling and up to high school, but then in university. And that actually, obviously gives a lot of access to everybody who wants to go for a university education. The second thing is that is really interesting and it's very, very unique to Germany is their apprenticeship program, where kind of people after leaving school between 16 and 18 decide to work in a company, still go a little bit to school, right, and really learn a trade and do that over 2 years. And that has really brought up a lot of people with really great careers in trades and areas that they're passionate about.
Do you think Canada should potentially consider trying to implement more apprenticeships?
Yeah, listen, I think in general, there should be many different ways to get a good education, a good career, right? And some are more theoretical, right? Going to university and college. Some might be a little bit more hands-on, right? And really launch a career in a certain area that you're excited about. I personally think any education system should have a good mix of both things, like something like an apprenticeship program and something that does more academic and more theoretical, like a university program. What is kind of interesting, you see, for example, Shopify, who has a German founder with Tobi Lütke, they have actually started quite a bit of internal programs that look a lot like apprenticeship programs, right? Where you have a kind of a good mix of schooling on the one hand side, but also really hands-on practice in the company.
Agreed. Their dev degree program in particular, which I recommend people check out, which is a partnership with both Carleton University and I think York University now as well, is a fascinating model where somebody in essence can work at Shopify throughout their degree while taking courses. And it's a great kind of mixture, very unique in Canada. There's not that many programs like it, but I think it's kind of a fascinating model. So speaking of your education, as mentioned in the bio, you have a PhD and have significant kind of post-secondary studies. So how did your post-secondary education journey influence your career as an entrepreneur and investor?
Yeah, I think the funny thing is, on first glance, you would say it has really nothing to do with what I'm doing today, right? It's not that I studied entrepreneurship or I knew even what venture capital was, but during university times, especially during my PhD, I met my future co-founders of Just Books, where we came up with the idea of starting Just Books as a marketplace for used rare out of print books, and launched it pretty much at the end of our PhD. So while I didn't necessarily learn much about how to run a company or kind of what I'm doing today, how to invest in companies, it certainly connected with me the people that launched me on my path of working in tech, becoming an entrepreneur, and then later becoming an investor.
Often the people who you study with in school can be some of the best co-founders or business collaborators. And I think it's a testament to higher education. Yes, someone learns things in courses, but you also learn and you gain so much from your peers and the peer network.
Exactly. And I think it's like at least as valuable as the stuff that you learn is really the connections you make, the people you learn from, the peers that you get to know, that become friends and potentially colleagues and co-founders. So I got extremely lucky in that regard.
The company that you co-founded, Just Books, which sold to A-Books, which A-Books then sold to Amazon. What is the experience like of going through that sales, that acquisition process with Amazon?
So first of all, when you look back and kind of look at it, hey, this person started a company and then eight years later sold it to Amazon. It looks like this very straight line from one point to another, right? And but sometimes you forget that there were a lot of ups and downs and a lot of struggles in between. I mean, in 2001, for example, 2 years into starting Just Books, we had almost run out of money. We were literally 2 weeks away from closing down the company when A-Books came along and bought the company. So got lucky once. Then in 2006, we had a term sheet on the table to sell our company to Amazon, and then the Canadian government basically blocked it because of the Heritage Act that didn't allow foreign companies to own a Canadian company that was involved in the books industry, and they couldn't care less that we were kind of a marketplace. We didn't own it. We were not a traditional bookstore or a book publisher. We were just connecting booksellers and buyers across the world. So that fell apart. And so 2 years later, we had figured that out and had kind of removed those roadblocks, and then finally got it over the finish line with Amazon. But just after we had signed the term sheet, it was 2008 financial crisis. Lehman fell, and all of the financial markets went in really dire straits, and it was a really tough situation. It obviously looks it was a great success, but it was definitely not a straight line. All of that.
There's so much uncertainty in entrepreneurship and uncertainty in life and the world. And I agree. I think a lot of young people, when they're thinking about entrepreneurship, they see these big success stories and I think that it's just this sort of straight line. You're now an investor and you work with tons of different entrepreneurs around the world and across Canada. What are some of the main criteria that you use to assess when considering to invest in a founder or startup?
Yeah, so we invest at the very, very early stages, so pre-seed and seed stage. And so the most important thing at that stage is really the team of entrepreneurs that is pitching to us, right? And we really look at three things that we care about. The first one is, and the most important is, how passionate are these entrepreneurs about the area they're pitching us, right? Because running a startup is usually not a 1 or 2 year affair. It's an 8 to 10 to 15 year affair, right? And if you're not really passionate about solving the problem that you're pitching to us, you're going to fizzle out. It's just too tough to run a startup that solves a problem that you don't really care about, right? I think the second thing is we really care about the size of the ambition. If kind of venture capital is really focused on trying to back the outliers, like the companies that can turn into standalone companies, go public potentially, be really a generational company. If you're the size of your ambition is to go for a quick trade sale a few years down the road, which might be a fantastic financial outcome for you, it just doesn't work for us. We want to be long-term partners for incredibly ambitious entrepreneurs that want to hopefully build a very large company. And then last but not least, and it's something that has gotten so much more important over the last little while as tech has gotten so noisy. We really understand how well you can tell the story of what you're trying to solve, why somebody should join your startup. So storytelling abilities have been gotten so much more important than ever before. If you can't tell a compelling story, it's going to hard to raise money. It's going to hard to recruit employees. It's going to be hard to kind of incentivize partners to work with you. So that's really something we look at. How well can you actually formulate why somebody should be part of your journey going forward?
You've seen, I can imagine, probably thousands of different entrepreneurs pitch and different stories. Is there any specific entrepreneur who you first saw pitch and you just thought that person is a natural born storyteller?
Yeah, I mean, listen, I think it's perhaps more generally, I think there's two things that make for a great story and delivery. I think the first one is the right level of abstraction, right? Because if you go too far down, you lose your audience, investors or even potential employees. Usually they're not that deep down into the startup. If you're too high up, nobody really understands what you're trying to solve, right? So the right level of abstraction where you present a very simple story, sometimes with analogies, sometimes with just like simple examples, is incredibly important. I think the second thing that you feel right away is the energy and passion of an entrepreneur, right? And that is obviously sometimes a little harder to bring across in a virtual setting over Zoom. But when you feel somebody is really excited about an area, really brings tons of energy with it, then you get excited as an investor and you want to be part of it.
Yeah, that makes complete sense. And there's that just, you can tell that level of enthusiasm in certain people and they just have it. And this is somebody who wants to spend 30 years of their life potentially in a given sector. So on the flip side, you also, I'm sure, see many pitches that aren't good and that don't end up working well. What do you think are some of the most common mistakes that entrepreneurs make when they're pitching venture capitalists?
I think we see a lot of entrepreneurs that what you would call opportunistic entrepreneurs, top-down entrepreneurs. They look at a certain area and say, hey, I want to be an entrepreneur. I don't really have a good idea, but whatever, AI sounds really interesting, or blockchain as a technology, right? And then they come up with these, this is startup XYZ with blockchain, or product XYZ with artificial intelligence. And these things usually don't really work because they often don't really address a real need in the market, right? The entrepreneurs usually don't understand what customers are looking for, right? And so they really come out of the desire to start something. They approach kind of the idea finding stage with a top-down approach, and I just don't think that ever going to work. I think on the pure delivery, it is really two things I would say, kind of people get sometimes a little confused. The first one is just too long, right? If you have 30 minutes to pitch and you come with a slide deck of 30 to 40 pages, it's really tough to get through, right? And you should never need 30 to 40 slides to tell your story in an initial meeting, right? You should have 10 to 12, perhaps 15. I think the second thing is investors often already know quite a bit about the market and they want to jump in and ask questions and really dig down and have a conversation, right? And some entrepreneurs get really confused when you ask questions, right? And I think you need to be flexible enough to adjust to the investor style, right? And if an investor wants to jump in and just spend some time on one slide and one topic, right, allow that instead of saying, hey, can we kind of try to stick to the deck that you've prepared. You need to be flexible enough to kind of have a conversation on the spot about the topic and what the investor wants to dig into.
Well, the best presentations to me was our conversations. They're not just somebody reading through their slide deck. That makes a ton of sense, and I've seen that on the flip side, just in life, in my work through Venture for Canada. You've also been in the venture capital sort of business for around the last decade, and there's huge trends or huge many ways that venture capital has been evolving, and there's certainly new emerging models that are shifting the investment landscape. Everything from Canadian founded Clearco and the rise of their sort of type of financing for entrepreneurs, but also a few years ago, angel-less syndicates and just in general, kind of shift in venture capital. As we look forward to the next kind of 5 to 10 years, how do you think the venture capital industry will potentially change?
So first of all, I think to put it into context, I think the two things that are really happening is, on the one hand side, venture capital is becoming a more and more important asset class, right? For the limited partners, these big pension funds and fund of funds that are investing in these venture capital funds on the one hand side. And that's just super important that it is not a cottage industry anymore. It's starting to become a really important industry that people look at, consider, and kind of research and commit to. I think the second thing that is really happening is there's tremendous amount of innovation just because of newer models, less friction in the market. And you mentioned a few of those trends in the last level, but just for a complete picture, Y Combinator has been an incredible accelerant of startups and funding. We had the whole emergence of seed funds and pre-seed funds. Back in the days, it really started with the Series A funds, much larger funds. Now we have much smaller funds, including version 1, my own fund. We now have what we call nano funds or solo GPs, so individuals that raise smaller funds, but are highly value add, very focused on certain areas, and can really provide a lot of value to investors. We have a whole category of secondaries where there's an opportunity for founders to take and employees to take some money off the table early on, kind of create more liquidity, so you don't have to wait all the way until you become public. We have the whole trend of much more global investing. A few years ago, most VCs only wanted investment in their hometown, and hence Silicon Valley was kind of one of the big beneficiaries of that trend. Now, I think most venture capitalists are happy to invest outside of their hometown and invest either across the continent or even internationally. So I think that all of those trends will just continue in terms of more assets that flow into, more dollars that flow into this asset class. And then secondly, more and more differentiated models of investors, from very small funds to very large funds, that trying to find kind of their product market fit, their own product market fit in that market, and make a living. So I think it's an exciting time, to be an investor, but even more exciting to be an entrepreneur that can kind of benefit from that kind of new choice of different investors and options.
Yeah, there are more choices for entrepreneurs to pursue potential investment than perhaps ever before, and to your point, more niches, more people focusing on very specific kinds of things.
Hey folks, it's Juanita here, Director of Strategic Partnerships and Marketing at VFC. Thanks so much for tuning into a new wave of entrepreneurship. If you're feeling inspired by the story of our alumni and the story of Canadian leaders, we'd love to invite you to learn more about developing your own entrepreneurial skills. From now until March 2022, we're accepting applications for the 2022 Fellowship Program, offered to all recent post-secondary graduates. The fellowship provides access to the training, community, and job support young Canadians need, to launch an accelerated career in Canada's startup sector. If this sounds like something you'd like to do, or if you know somebody who'd like to do this, head over to www.ventureforcanada.ca to apply today.
So one thing I find, Boris, is that I talk to a lot of young people and a lot of 22-year-olds who are starting their career. There are so many 22-year-olds who want to one day be venture capitalists. It's like probably one of the most sought after kind of venture goals. And one of the things I find is that there's a lot of 22-year-olds who are like, oh yeah, I want to be a VC like now, like today, like at 22. And one of there's very few 22-year-old kind of venture capitalists. So if you were to give advice to a 22-year-old who is, let's say, just graduated from prestigious program, they're really keen and they want to one day be a venture capitalist, what advice would you have for them on how to potentially achieve that goal?
I mean, first of all, I love that development because, as I said before, when I went to school, I didn't even know what venture capital was. I mean, obviously, because it was in Europe where venture capital was even less prominent than North America, but secondly, because it was also a long time ago where venture capital was really this little cottage industry, and I don't think anybody really saw that as a career path. I think I only learned about it when we raised money for our startup in '99. That's the first time I heard about venture capital. Before I didn't even know that existed. So it's great to see that it's actually becoming more prominent, and people want to go down that road. I think there's really two ways to become a VC. Right? The first one, and the more traditional one, has always been you join an existing firm as an analyst associate and you'll work your way up, right? And especially the large firms have very good programs where they hire literally dozens of associates and analysts every year that they train, and if people do a good job, they have the chance to move up and over time become a partner in the same way that law firms work or private equity firms work, etc. I think the other thing, the other way that is now open is really, and kind of that's the path that I took, is basically you become yourself a VC, right? And you start with a very small fund, and over time, as you prove out your investment thesis and you prove out returns, you actually are able to raise larger funds and get into that, right? And that's really what I've seen in the past. Now, in the last little while, a bunch of very young people that have just a very differentiated offering, very young, have never worked for any venture capital firm, have the ability to raise funds, right? And you just have to really understand how you differentiate in the market. And there's a few areas I've seen people differentiate. There's some that are really great on social media and have built up an audience. Sometimes they run their own Substack. Sometimes they have just an incredible TikTok following. Sometimes they have really incredible Twitter following, right? And they're really building up their insights and their deal flow from that area, right? From their social media presence and their credibility through that. The second thing is you can be very specialized in a certain area and really know everybody. Esports or gaming. It would be hard as a 21-year-old to say, well, I'm going to be a generalist VC. But if you're the one that has the deepest connections and insights into gaming trends or esports, or whatever it is, I think you're onto something, and I think you have a chance to raise a small fund. And we mentioned it before, but with AngelList, these rolling funds, or generally the fund product, I mean, you can easily raise a $2 to $3 million fund, start investing small checks, prove out that you have the deal flow, prove out that you get into the good deals. So I think it's easier than ever before.
I guess more granularly, what's the process like of actually raising a venture capital fund? It's interesting. I think just in general amongst like kind of lay people in society, is I think people think of VCs as just kind of like giving money to entrepreneurs and kind of investing. But then they also don't think that, oh, VCs also need to be pitching all the time or a lot of the time to raise money for their own kind of funds. So yeah, I guess what's the process like of raising a venture capital fund?
Yeah, I mean, it really depends a little bit kind of on where you are in your career and with your network, right? So perhaps I kind of take these two scenarios. If you're a new general partner, so a new VC, right? And I was one a little bit less than 10 years ago, right? What you're really trying to do is you basically try to raise a small fund, and you're trying to go to your network and the network of your network, right? And trying to get small checks, small commitments from those people. That just means a lot of hustling. It took me over 12 months to raise my first fund, probably hundreds of meetings to then in the end get about 30 investors that committed. And very different amounts from as small as $50,000 to as large as perhaps $1 million. But it really means that kind of it's hustling through your network and the network of your network, and kind of trying to get a lot of meetings and hopefully a few yeses, right? And not unsimilar like an entrepreneur that is trying to close their first seed round, but doesn't have many connections, doesn't really have a track record, doesn't really have traction in their company. So now, as you build up your reputation, as you put a few funds, invest a few funds, and you have kind of first proof points and returns, etc., that gets much easier. Then you can go to institutional investors, so pension funds, funds of funds, family offices, etc. And they have a much more formal process, but they can also write a much larger check. So, some of our investors in the most recent fund, they're investing between $10 and $15 million into a fund, right? So you're not collecting the $50,000, $100,000 checks anymore, but you're really collecting much larger fund sizes as you have proven out your strategy and you put down returns, right? And so every incremental fund gets easier and easier if you do a good job of having invested that previous money in the previous fund.
Yeah, it's fascinating, and I think one piece of advice that someone once I heard once give to a group of entrepreneurs was that when an entrepreneur is looking to raise money from a venture capitalist, is to understand who are the investors in that venture capitalist's fund, and to understand what their time horizon is. Do you think that is like good advice for entrepreneurs?
Yeah, I mean, listen. If you have the chance to, if you have the optionality, right, always go for the investor that is most likely providing the highest amount of value and has the most amount of patience and has the longest term outlook, right? Unfortunately, sometimes you just don't have that optionality as an entrepreneur. But I generally agree. I mean, there's so many people that or kind of investors that can be value add and have a long-term view, because they're also not pressure from their investors is definitely the best partners to have. It's just you might not have that option.
That makes a ton of sense. You're also an expert on marketplaces, and I've read, I did in my research on you, you've written extensively for many years about online marketplaces, which makes sense given you have almost 2 decades experience, and Just Books and A-Books, was in that space. So can you define, just for our listeners at a high level, what is an online marketplace, and what are the types of marketplaces currently that most excite you from an investment perspective?
A marketplace is ultimately a platform where you connect buyers and sellers around a product or service, right? And they really started on the product side. So eBay was probably the most prominent OG marketplace. Then we've seen quite a bit of services marketplace come up. Uber and Lyft come to mind around the rise of mobile. we've seen quite a bit of what we call managed marketplaces. So marketplaces that manage a little bit more of the transaction than just the connecting of buyers and sellers. Think about Open Door or Zillow Houses, which is Zillow Homes, which basically enables real estate transactions, but takes quite a bit of risk in between and manages that transaction. I think the thing that we're most excited about right now is at the intersection of what's happening in blockchain, crypto, and marketplaces, right? And a lot of what we're seeing in crypto and blockchain right now is new sorts of peer-to-peer exchanges around financial products. So one of our portfolio companies is Uniswap, which is the leading peer-to-peer exchange for tokens and currencies in the Ethereum ecosystem. And what is super fascinating in that iteration and that new generation of marketplaces is there's really no middleman, right? It's a protocol that enables the connection of buyers and sellers, but there's no company in between that does anything or takes a fee for that. Secondly, you can very well incentivize buyers and sellers and users in general to participate in these marketplaces by providing them a piece of the ownership in the protocol, right? So when you think about one of the core problems of any marketplace is solving the chicken and egg problem in the beginning, like how do you have enough supply to attract buyers, and then how do you have enough buyers to attract more supply, and kind of this continuing chicken and egg problem of buy side and sell side is a tough one. But if you have the opportunity to hand out incentives in terms of ownership in the underlying protocol, you can overcome these chicken and egg problems much quicker, right? And so we're really fascinated by these two developments of no intermediary, no marketplace operator that takes a fee, and then secondly, instead of somebody taking a fee, you actually handing out incentives to the participants that actually create the value in the marketplace, which is the users on both the buy side and the sell side.
Yeah, it's a fascinating development in marketplaces. It's amazing to see how it's evolved over the early days of eBay and kind of two decades ago to now kind of crypto enabled marketplaces and kind of to see direction that goes in. I also saw that you recently announced a focus on climate and energy startups. What areas of climate and energy technology most excite you and why?
I think it's amazing to see what's being developed right now in energy. I don't think we've ever seen so much innovation, if that is in solar, in energy storage, in energy management, etc. It's pretty amazing to see that innovation. As version one, and that's kind of the second part to the answer, I think we're mostly comfortable investing in software solution, the software layer for energy, just because we're not very good and sophisticated hardware investors. And obviously a lot of the innovation that is happening in energy and climate is on the hardware layer, right? And so, but give you a few examples of 3 investments we've made in the last year. One is a company called Sylvia Terra that has built up a natural resource marketplace that is powered by satellite data. So the idea is that if you're a owner of a forestry asset, instead of cutting down your trees, you sell carbon offsets to companies that need these carbon offsets as credits. And satellite data are going to make sure that you actually keep your promise instead of turning around and cutting your trees right after you got the check. So for the first time, it's really this satellite data enables us to have credible, verifiable carbon offsets. A second one is Patch. Patch is a carbon offset API. It's basically like when you think about Stripe, what they enabled for payments, Patch lets anybody build a carbon offset program into their product, right? And so they have on the one hand side, they have carbon offset projects. Sylvia Terra could be one of their suppliers. And then they let anybody use the API to very easily calculate the amount of carbon that was created, the offsets that are required, and execute exactly at the directly on carbon offset purchases. And last example is Empowered. Empowered builds kind of energy management systems, so that lets companies save energy based on the cost and availability of energy, the energy mix, and really automates all that energy management, which right now is mostly manual, right? But you could imagine that if you hook into all of the devices that a factory operates, and you can automatically
It's
manage all of
fascinating, Boris.
those.
I feel
can
like
save
you
a lot of
know
energy.
so much about so many different companies in so many different verticals, because you've invested in 100 different companies and you've seen probably 5,000 different pitches. So I could interview you forever because you have just an encyclopedic knowledge about an incredibly wide range of industries. I really recommend our listeners check out their website, Version 1 Ventures in the blog, which is a fantastic resource of really great content on a really wide range of topics. They also have great ebooks on online marketplaces that are really interesting to check out. And really, to Boris's earlier kind of comment about venture capitalists like standing out in terms of building a brand, which also helps deal flow. I think that the quality of your content is extremely high, and big kudos to you for the content that you put out into the ecosystem, Boris.
Yeah, thank you. I mean, listen, we obviously what one side goal is always of content of building your brand, but it also helps us to really think through these issues and topics, and the typical, if you write it down, you understand it much better. So we really enjoy writing a weekly blog post and putting out investment thesis, why we invest in a certain company, give updates on how we think around version 1 and what kind of gets us excited, or just have some topics of where we share our expertise and knowledge and insights in some areas.
On the topic of kind of recommendations, Adventure for Canada, we're a big fan of reading and books. What are 3 books that you recommend our listeners check out, and why do you recommend them?
So the first one is Angela Duckworth with Grit, right? And grit is obviously the key ingredient to any successful entrepreneur, and it's an amazing book that kind of examines the importance of grit. Highly recommended for anybody to read. Second book, I love reading entrepreneur biographies, and the one that probably I liked the most in the last 5 years was Phil Knight, Shoe Dog. It's the story of how Phil Knight built Nike, and a little bit picking up on the theme we had before. It's never a straight line. Kind of to see how he built Nike, which obviously is a massive success today, but it wasn't always that obvious. And a lot of the things that he had to fight through, just because there wasn't much capital available, there wasn't as much technology available as today. It's inspiring how he built this company over the years. And then the last one would be Ben Horowitz, The Hard Thing About Hard Things. Ben is one of the founding partners of Andreessen Horowitz. He is an amazing thinker around management practices. And for me as an entrepreneur, as we scaled 8 books, and first time manager, a first time entrepreneur, I had a bunch of situations where I said, like, I really have no idea what I should do, and like I kind of followed my instincts, but I'm pretty sure they weren't always right. And then about 10 years later, I read Ben Horowitz's books after it came out, The Hard Thing About Hard Things. And it was like every single page was like, oh my God, if I had known that, it would have been so much easier. Or, oh, I'm glad I decided in the right way, because it looks like Ben is thinking in the same way. So it's for somebody who's building a startup and scaling it. It's an amazing resource for finding your own management style.
I agree. Those are all excellent books. I have happened to read all 3 of them, and they're fantastic, all in different ways. I also am a big fan of biographies just in general, and I find Phil Knight's is probably one of the most memorable. A lot of business in particular, autobiographies can tend to be very sometimes inauthentic, but his is like one of the most authentic like autobiographies, and it's fascinating how many times Nike almost went bankrupt in the early years. Pretty remarkable story. So final question to close it off is if you could go back in time, Boris, and ask and talk to your 22-year-old self, what would be the advice you would give the younger version of yourself today?
Yeah, I mean, partly I think one of the things that has really worked out for me, and so I would give exactly the same advice to me again, is basically following your instincts, right? And don't overthink things. And there were like 3 or 4 moments in my life where it was like really, really big decision in hindsight. At the time, it didn't even look that big, but really, really big decisions in hindsight. And I just followed my instincts and it worked out, right? And so I think sometimes people are a little bit too focused on kind of having a roadmap for 5, 6, 7 years. Sometimes it's just easier to follow your interests, follow your passions, follow interesting people, and follow your instincts. And I think it certainly has worked out for me. And I would just give exactly the same advice to my 20-year-old self, right? It certainly has worked out.
It's fantastic advice. One of the things we often say at Venture for Canada is focus on the journey, not the outcome. And a lot of times people focus, particularly when they're starting out, a lot on the outcome. And the reality, as we see in the pandemic, is the world is very uncertain. Outcomes are uncertain. And sometimes if you go with the flow and follow with the journey, people end up being happier and in many ways more successful than sticking to a rigid path. So that's fantastic advice. Really interesting conversation with you today, Boris. Thanks so much for coming on the show.
Hey, thanks for having me. That was fun.
That's it for this week's episode of A New Wave of Entrepreneurship. Stay connected with us via our social and our email list. Subscribe to us in your favorite podcast app so that you don't miss our next episode. If you have feedback on today's episode, tweet us at Venture4Canada. That is Venture, the number 4, Canada, or email us at podcast@venture4, that's spelled FOR, Canada.ca. We'd love to hear from you. Thanks for listening. I'm Scott Stewart, and until next time, stay safe, stay motivated, and stay grateful. A New Wave of Entrepreneurship is produced by Juanita Lee Garcia and Latifa Farah. Editing and mixing also done by Latifa Farah. Erica Ormanston is our editorial assistant. Mark Wallach and Premium Beat own the copyright and publishing rights related to the song used in this podcast. The comments and opinions, recommendations, or suggestions expressed on the podcast by the guests are not liable to Venture for Canada and belong solely to each individual. Any information provided stated by our guests and our host is independent of Venture for Canada. A New Wave of Entrepreneurship is a Venture for Canada brand, and all content is owned by Venture for Canada. If you'd like to use our content, please reach out to us at podcast@venture4, that's spelled FOR, Canada.ca.